Hello again, and welcome back to Keep America Growing, a podcast about the U.S. crop insurance system that helps farmers and ranchers manage risk and recover when disaster strikes. I'm your host, Tom Zacharias, President of National Crop Insurance Services. Over the course of this podcast, we've talked with farmers, economists, policymakers, and industry leaders about the many factors that contribute to a strong farm safety net. Today, we're going to focus on one of the institutions that has helped shape and guide crop insurance for decades, and that's the Federal Crop Insurance Corporation, or FCIC. For that, I am pleased to welcome Dr. Robert Johansson. Rob serves as Director of Economics and Policy Analysis for the American Sugar Alliance, but in earlier days, many of you will know him from his time at USDA, where he served as Chief Economist. During that time, he also chaired the Federal Crop Insurance Board, helping oversee one of the most successful public-private partnerships in agriculture. Rob was also at the Economic Research Service, the Congressional Budget Office, and the icing on the cake, White House Council of Economic Advisors. So somebody thinks he's a pretty clever guy. I've had the privilege and opportunity to work with Rob over the years in his roles at USDA and even currently with Sugar. It's fair to say we have a friendly college basketball rivalry between Northwestern Minnesota and U of I. So there's a flurry of activity in the February and March and January months on what's going on with college hoops. So with that, Rob, thanks for joining us today.
Hey, Tom, so great to be here. Great to see you again. I know we don't get a chance to overlap as much as we'd like. Hopefully, I may be coming out your way sometime soon, but I always enjoy our conversations. And now that I'm not at USDA, we don't get to have those as often as we'd like, but certainly I like texting with you during March Madness and sort of seeing how your team is doing. Very infrequently do I see my teams in that tournament, but nevertheless, over the season, we still have a chance for me to lose a couple beers to you that typically get repaid when I come out to Kansas City for NAFB in November.
It's not about who wins, it's about who doesn't lose, right?
That's right. Exactly.
Okay, with crop insurance, we're all winners. So let's start with the basics here. Many of our farmers are familiar with crop insurance, but fewer understand the role of the Federal Crop Insurance Corporation. Could you explain to us what that is and why it's such an important part of the crop insurance system?
Yeah, that's great. A great setup. As you noted, not many people are aware of the FCIC. So let me just give you a quick background as I understand it. Again, I've been away for 5 years now, so I'm wiping away a couple cobwebs. But as your listeners know, crop insurance is probably the first thing farmers think about when they're asked about the Farm Bill safety net. It's a key to protecting the financial stake that farmers are putting into their operations each year. The Federal Crop Insurance Corporation, or FCIC, administers the Federal Crop Insurance Program. The talented folks at RMA, the Risk Management Agency, in turn manage the FCIC. It does they do the day-to-day of making sure the various insurance products are operating correctly, that agents are being reimbursed, that the insurance companies are offering products to meet producers' needs in all parts of the United States, et cetera. Now, the FCIC Board of Directors, as you noted, which I was the chair of for my 6 years as chief economist, provides direction to RMA so that the program is operating with actuarially soundness and a fair and consistent manner. The board has 9 members: the undersecretary for FPAC, the chief economist, who is typically the chair, the administrator of RMA, 4 farmers, of which 1 who grows specialty crops, someone involved in insurance, usually an agent, and someone who knows about reinsurance or insurance regulations.
That's a lot of ground to cover for the FCIC board. During your time as chairman of the FCIC board, what were some of the most important decisions, initiatives, or developments that helped strengthen the program?
Well, I know it changes depending on the year, but usually there's about 5 FCIC board of director meetings per year. 4 mainly to review new products, and then 1 to cover reimbursement and other administrative issues. During my time as chairman of the board, we saw developments of new products to cover new sectors, just like any other period. And those considerations typically involve, good research up front, close monitoring of those new products during the initial rollout. I'll mention 2 of the many products we developed during my time, Dairy Revenue Protection, DRP, as well as HIPWE, or the Hurricane Insurance Protection Program, or Wind Index. Both of those became very successful products. We developed some other ones that weren't quite as successful, but those are 2 that both dairy producers as well as a lot of growers along the Gulf have found to be extremely useful.
Definitely the development of the livestock program, and as well as the movement or transition to area index and how they complement, especially coming out of the big beautiful bill. All that really brings us to a place where crop insurance has grown substantially, and y'all were part of that development with the FCIC board. Having said that, you had a unique vantage point as USDA chief economist and FCIC chair, and I know we got to talk a lot about this. How did economic analysis help shape decision making around the crop insurance policy and program improvements that we saw during your tenure?
Yeah, that's a great question. But the simple answer is economic analysis and data were always and always have been a key for making decisions around the crop insurance program and improvements to the program over time. RMA has talented economists and data analysts that provide the FCIC board with their estimates of how new products, for example, would stack up against similar products, or why certain features of those products need to be adjusted, bring them back into line with actuary soundness. Sometimes that does run up against political perspectives, or sometimes the data isn't available to do something that folks might want. Now, obviously, every situation is unique. Every product is unique, and the data that is required to either do an improvement or a development is also unique. But over time, the program has developed a history, and that history really helps inform improvements going forward.
I've always enjoyed when there were new things going on with the FCIC board, and you and I would get to chat about some of the economic analysis and micro aspects of this. And I always found your insights quite helpful and supportive of the process. Now, we say very often around here and elsewhere that crop insurance is a public-private partnership. And from your experience, what's your perspective on why this has been so successful over the years?
As you and I have talked about over the years, this question is key to crop insurance, but it's also one that has different opinions in our profession and the economics profession. I'm firmly on board with the viewpoint that what makes crop insurance so successful for producers is, yes, the premiums are subsidized by the government, but it also involves substantial farmer payments. If it was all farmer paid, then you simply just wouldn't get as much involvement. That would drive up premium rates, and the program would falter for many regions and crops. And it would also lead to an increased reliance on ad hoc disaster programs. For good policy that encourages farmers to consider the riskiness of their farming decisions and that offers affordable and effective policies, you need that public-private partnership. And ultimately, in my opinion, it results in a much more efficient safety net for farmers and taxpayers than you would get if you didn't have that partnership.
I think another aspect of this is crop insurance is quote unquote ex ante institutional setting. In other words, farmers know what their coverage is at the start of the year. They know how much premium they're going to pay. And as you mentioned, the contributions in terms of producer paid premium are not trivial. They're in the billions of dollars every year. So farmers, quote unquote, have skin in the game. So you couple that with the ex ante part aspect of crop insurance. It does have a nice public policy ring to it, and it has been successful because of those attributes.
That's right, Tom. Yeah, the ex ante versus ex post sort of discussion is, I totally agree with what you just said. For farmers to consider what is best for their operation, given what they are growing and where they're growing it and how they're going to grow it, is key to that efficient system. And If you didn't have that, you would. I mentioned some issues, more increased reliance on the sort of ad hoc ex post type of program, but producers really can't count on that. They can count on crop insurance, which I think is a really important part of this program.
To quote a good friend of ours down at Texas A&M, Joe Outlaw, crop insurance is bankable. So farmers know what's going on with the program and they can rely on it, which is a super strength. Matter of fact, it's one that gets discussed often when we talk about crop insurance. Let's talk a little bit about the 508H process. That's a little sort of policy nuanced, but this is the process through the FCIC board and RMA that allows private companies and organizations and individuals to develop or propose new insurance products. Can you spend a minute or two and walk our listeners through this aspect of product development with the FCIC board?
Yeah, no, it is great, and of course, the board spends a lot of time on these type of this aspect of the program. The 508H process and 522 process refer to provisions found in the Federal Crop Insurance Act. And as you noted, it allows different ag sectors or individuals or companies to bring forward new concepts for a new crop insurance product, either as a concept or as an idea or as a fully developed product. And then they bring that forward to the board, the FCIC board, for approval, for getting essentially resources to either develop the product or to market it under the FCIC USDA sort of logo, their program. And then RMA would take over some aspects of operation and maintenance, but sometimes the submitter will also take over some of those roles. So think of a specialty crop grower. This is what I think of usually, that only right now has non-insured disaster assistance program, or a NAP, as it's often known as, available to them in the event of a peril. So a lot of times these type of specialty crop growers, it doesn't have to be specialty crop, but say you're in an ag component that isn't covered by crop insurance yet, or you don't want to participate in whole farm insurance. You get a disaster and then you apply to FSA for indemnity to help you cover your losses. And it's just a long process. It's not really all that streamlined. If it's a development of a new concept, then, the developer goes out and comes back again in sometime 180 days or so and says, here's what we, have developed. And the board looks at it and says, yeah, that's looking good. You still need to do X, Y, and Z. And then they bring it back again. And eventually, more often than not, it turns into a final product that eventually it gets sold, as part of the FCIC program. And although sometimes it doesn't, sometimes that product just either the developer or the submitter doesn't really listen to the board in terms of what they're asking for, and keeps bringing back something that's not going to be in the viewpoint of USDA as being actuarially fair, or doesn't offer a lot of risk management that's not already available through other products. Anyway, so that process takes some time, but eventually you get a new product out there to meet the needs of the growers. And a couple examples might be production revenue history policy for strawberries, or some of the tree policies that we've seen developed recently, or within the last 10 years, such as pecans and macadamia nuts. So there are always different products being developed for unique crops, and that's part of the beauty of the program.
Yeah, we need to keep our eyes on the prize with respect to specialty crops. Liability has increased quite substantially over the past 10 to 15 years. I think it's 25 or so billion dollars in liability protection for specialty crop growers. And again, with the big, beautiful bill, some incentives on the supply side for A&O compensation for servicing those policies, as well as additional premium support. So hopefully with those incentives and then the overall interest in specialty crops, we'll see even greater involvement, greater improvement in that area of crop insurance. So we'll stay optimistic. And as we stay optimistic, agriculture continues to evolve. No news here. but there's new crops, new crop technology, changing weather, etc. And how do you see crop insurance keeping pace with the ever-changing face of agriculture?
Well, you mentioned how farmers can bank on crop insurance. They can count on it because it's an ex ante program um, that they've thought about before purchasing whatever kind of coverage they'd like before the season, and then they know what they've got. That's one aspect of sort of this ex ante nature of crop insurance. This another one that's underappreciated, I think, is the fact that crop insurance products are routinely re-rated by RMA, which means that the cost of the product uh, is continually looked at by RMA on a routine cycle. Not every year; it's like every 3 years. They go back and they look at, is this premium the right rate for this crop in this region? And so, what does that mean? It means that if you have changing regions that crops are grown in, for example, we've seen a big expansion. Obviously, this is over time, but of corn up into the upper Midwest due to seed varieties. And so, as you see changes and movement of crops in new regions or an expansion in another region, or it's too dry in some areas, and some of those growers are now continuing to grow that crop, but it's more risky, so it's going to be a more expensive product now. So the program itself automatically adjusts for all of that, which I think is just a fantastic and underappreciated point about the crop insurance program. Doesn't get studied enough. I really think it's a unique part of how the system operates and maintains its actuarially fair sort of nature, as well as being required to cover new crops and new regions.
All right, so you can run, but you cannot hide. We ask all our guests this question, and since we've snuck in the ex ante, little economic nuance terminology, ex ante is a young person. You were probably not thinking as a career chief economist at USDA, your work in agriculture in general. So, how did you, for lack of a better term, stumble into this, and what advice would you give to others who might not know these opportunities exist?
Well, everybody's got their own path to trod, and I got a couple pieces of advice there. But in terms of why I ended up in this field is I basically ended up going into Peace Corps of all things and working with farmers. And I just loved it. I just loved working with farmers. And I grew up in Minnesota, all around farming communities. And, I've got that in my background. But I didn't really, I was a city boy, and I, got an economics degree in Chicago. But then I ended up working with farmers for the next 5 years. And I just liked it so much and really enjoyed that. I guess part of the careers, and I came back and I studied ag econ. I just wanted to go into that field, and that's sort of what led me to specialize in looking at farm policy, that trying to improve how producers can do their job through policy. Obviously, policies or regulations can make it harder. So, I think there's ways to make things easier, and that's kind of what drives me. And I really want to work on aspects of farm policy that help farmers continue to succeed at being the engine behind the most amazing productive food ag system in the world here in the United States. And so that's what has sort of driven me in my career. In terms of advice for young people that may be listening to this, I just be open to what your interests are. If you're interested in working in agriculture, if you're interested in numbers and data and science, ag econ or applied econ is a great field to pursue, and there's lots of opportunities out there that will really snatch you up and put you to work doing that kind of in that field.
Absolutely. This is wonderful. Your contributions over the years have been substantive, and everyone appreciates what you've done for agriculture for sure. So thank you for sharing your insights and helping us understand better the institutions and partnerships that may not always hit the front page or the front fold in agriculture, but the institutional underpinning that crop insurance has. We're very fortunate that that's been available to us, and we've been able to work together to grow the program. As we've heard today, the crop insurance system, it didn't become successful overnight. Its growth has been driven by this collaboration among farmers, policymakers, analysts such as yourself, the private sector, and the folks at USDA. Folks have worked together to continuously improve the program and adapt to its changing needs. With that, I want to thank our listeners for joining us today for another episode of Keep America Growing. And to all the farmers and ranchers across the country, thank you for the work you do every day to keep America fed, fueled, and clothed. So until next time, I'm Tom Zacharias. Stay safe. Thank you very much.